Bitcoin has absolutely exploded today, but it's not just today. If we remember to zoom out on these charts, we can see that this has been in an uptrend all the way since back here, following this FTX collapse, small bit of consolidation here. And if you look at the global liquidity charts, which I show on the BitLab Academy daily stream regularly, there is a massive influx of global liquidity roughly about this time, front running this massive uptrend that started. Now, through all this, we've had these 20% pullbacks time and time again, and the markets keep pushing higher. Everybody's still wondering, are we going to get that big sell-off? And my argument here today, my thesis here is to suggest that maybe this time's different. And I'm going to show you some signals that could have shown us, that could have clued us in as investors, as traders, as speculators. When's that next move coming? We don't look to the price on these small time frames. We look to the data, the behavior of different participants in the market. So I just want to point this out. Not so long ago, back here in August 2023, all the way through October, we had this long bit of consolidation forming this lower band of support. And once we moved out of this zone, we have only been on an upward trajectory. We had the huge speculation around the ETFs through all of here, and then we had this washout. This was that ultimate ETF approval, and then let's sell the news. And where did this price come down to? It came down to roughly 38.6. And the move since January 23rd until now has pushed up over $16,000 in the matter of a month. But why is this? How could we have caught this? Well, let's look to the behavior of what's going on chain. First things first, I shared this on my Twitter a few days ago. This is from OnChain College. We can see that we've had massive outflows, this exchange net position change. What is this? I talk about this a lot in the BitLab Academy course on on-chain data analytics, but what we're seeing here is people moving coins out of the exchange and into their private wallets. They're in their private wallets. Would you assume that that means they're looking to hold or looking to sell? We can use the type of behavior. We can look at the different types of behavior from different types of wallets, all different sizes, and broadly of all wallets on network, and see what people are doing. They were preparing to hold. They are not moving on to exchange. This was telling us people are preparing for this type of move. Now, when we move on to this next chart, we can see we've had inflows into accumulation. These are those types of wallets that have historically, once coins have moved in, less than 75% of the coins that get put in there get moved or traded. And we can see here, we've had all-time highs, all-time high accumulation on these addresses. Now, a lot of people are speculating, are we going to get that big pullback? Well, I would argue we're seeing the people that have an idea of what to do in this market. They're accumulating. This is what they've been doing. It's been scaling up even as price has risen. Now, why is this? Well, when we consider what's going on with these new capital inflows, these new capital roads into Bitcoin, the ETFs, not only are they advertising what's going on in this space, it also creates new institutional pathways for them to get Bitcoin on their balance sheets as well. We've seen record flows, and we're going to get to that in just a moment. When we come over here, I just want to point out, we're talking about behavior within this market. What types of wallets are doing what, and also long-term held coins versus short-term held coins. When we see record levels of long-term held coins, we see right here, which just preceded this whole move that we're in. This is the highest level we've ever been. Over 76% of every coin in circulation was being held or being held at some form of length that was long enough to be determined to be long-term held coins. And they're statistically exponentially less likely to be sold in the face of volatility when you have those long-term held coins. So what this is saying is, although these prices were so much higher than these lows over here, the market actually, the fundamental strength of the market was a lot stronger here because nobody's really willing to sell at these levels. People are looking to hold. Now, when we come over to this next chart, we can also see the short-term holder supply, those coins that have moved within the last 155 days. And what we actually just saw is we had record lows. And this makes sense because it correlates with those long-term held supply. And of course, that means we're going to have a lower amount of short-term held supply. And we can see when we have these lows, these green dots that I put on this chart, we see these correspond to excellent parts of the market that you could get into the market to ride huge gains. And this is where we're still sort of coming out of. Even where we're at right now, we haven't even eclipsed the lows from the last cycle in terms of how little short-term held coins there are. This is beautiful. This is a recipe for absolute giga god candle pumpery. This is what we're talking about right now. So there's been signs in the chart based on the behavior of people in this market. And this is the type of stuff we want to pay attention to. The question is this time different? Well, every cycle is different. We have different things within the world, within the market, within socio-global politics, all this stuff, as well as the size of the market cap, as well as how much monetary energy is involved, also the global awareness, how Bitcoin is in the zeitgeist. But when we look at this chart right here, again, this is that same short-term holder supply. What I want you to notice is everybody, even including myself, was wondering, are we going to get that historically proven pre-halving pullback in the market? Well, we've seen when we've gotten these pullbacks, which is where these red dots are, pre-halving, what is the correlation with what's going on with short-term holder supply? We have these large spikes in short-term holder supply, meaning a lot of retail has come in. There's been a lot that's been traded around moving into that halving. What we're seeing on this current cycle, the short-term holder supply is still at record low levels regionally compared to all of the rest of the history of the Bitcoin market cycle. So what does this mean? There's clearly a different, at least mind frame around people in the market. There's more maturity coming in the market. In fact, I wrote here on this tweet, I said, the composition of the type of Bitcoin holders or the activity pre-halving is different this cycle. We can see this on this chart, okay? Could explain why we have had no major pullbacks yet pre-halving. Each one of these little dips that we've had along the way that felt like the world was ending, they all represented only about 20%. So are we in a new paradigm? Well, let's talk about it. Not to mention the new avenues of capital, all these ETFs, all this global awareness, also the ease of use with things like Coinbase and all these other technologies and simplified UI and UX, user interface and user experience. So it's making it easier, as well as people are more aware. And it's also, we have the stamp of approval from the #1 asset manager in the history of the world, BlackRock, Larry Fink, out there on basically a press tour singing the praises of Bitcoin, as well as Michael Saylor. And you wait till we start getting some of these other major corporations and institutions utilizing and integrating Bitcoin into their systems. Think Amazon, think Walmart, think Apple. There's so much that's going on that's still to come. Is the price high? Sure, it's high if you don't understand the data we're looking at. We are in a different paradigm right now. We need to understand that. Now, coming over here, this chart right here, I shared a few days ago. This is actually a chart that Timothy Peterson shared actually 6 years ago. And when we look at this chart, what's interesting is what we're seeing is Facebook versus Bitcoin. And it's also utilizing something known as Metcalfes Law. And what we're doing here is we're looking at the size of network growth over a period of time. And what this projected back 5-6 years ago was that if you scale this forward 5-6 years, so 1, 2, 3, 4, 5, 6, this line comes up to where? $50,000. This projected it based on network growth. And Bitcoin is tracking, that cell phone adoption or internet adoption over time. And so we keep feeling like price is high and we're ignoring the data. We need to understand Bitcoin is not the US dollar. Bitcoin is not a traditional asset. Bitcoin is a unique, independent asset, store of value, current. It's its own thing. We don't even have the right words to explain it because we try to fit it into the categorical boxes of other things that this is not like. Yes, it shares some properties with those different things, but it's its own unique asset. In fact, it has that fixed supply with inflation. Yes, because remember, it started with 0. So we have to have inflation to get up to that full 21 million coins. But it's on a fixed supply that has inflation that reduces by half every year. We've never known an asset like this. This is why we cannot correlate if the price is high or low. Ignore the price. What does the data say? What are the big institutions and whales and smart money doing? That's what I'm trying to look to. I'm trying to find projections based on data, not based on my emotions, hopes, fear, greed, or misunderstanding of this asset. Moving on to this next thing, we see right here, this is a chart from HODL 15 Capital. And essentially what it's showing here is this red line is the number of Bitcoin produced today. Now look, since the ETFs have launched, we haven't had one day where we've had less buying power. We've never had less buying power since these ETFs have launched than the actual Bitcoins produced today. So even subtract the rest of the entire retail market that's out there in Bitcoin buying on a daily basis. Just the ETFs alone create a supply demand shock in the market. This is not even accounting for the halving that's about to happen in mid-April. So are you not bullish? I am so bullish. Now, coming on to this next chart, we can also see it's not slowing down. It's official. The new 9 Bitcoin ETFs have broken all-time volume record today with 2.4 billion, just barely beating day one. So it wasn't just a fad right off the block. This is sustaining, and actually it's looking like the momentum is shifting in the favor of creating more buy pressure on Bitcoin. So it's beating day one, but about double their recent daily average. You see, we had a little bit of a dip yesterday, but now we zipped right back up. IBIT went wild, accounting for 1.3 billion of it. One ETF alone, that is BlackRock's ETF, had $1.3 billion in buying interest and actual execution on their Bitcoin ETF. If you're not bullish, then you're blind and you're deaf. That's the issue here. This is what we all need to realize. This is the fourth cycle for retail. This is the first cycle for Wall Street. This time is different. We need to make sure that we do not fall prey to our emotions, our hope, our fear, our greed. Look forward in this market, zoom out on these charts, and realize that everything that we need to do right now in terms of investment and capital strategy within these markets is to ensure that we do practice our risk management, but we don't chop ourselves out. Let's make sure we're positioning ourselves for the future so we don't get held hostage by our past. That's all I got. If you enjoy what you're seeing here, I hope to see you in our community. Hit that like button, hit that subscribe button, join us here, and hopefully we'll see you maybe in the Discord, bitlabacademy.com. I hope you have a wonderful day. Thank you for tuning in. Let's stay bullish. Let's get on top, and I'll see you at the top. Adios.